Are we up?
Yes. Hello out there, everybody in Facebook world. I'm sure you're kind of looking at me funny because I got massive headphones on, but here's my friend Eric Hinojos. I always mess it up, man. I'm
Hey,
sorry.
it's Inopos. H is silent.
Hinojos.
It sounds like an H. There you go.
I know.
Inopos.
Katie always gives me the look, but Eric Hinojos from Navy to Navy Homes. I've known you for like 2 years. I should know your last name right.
It's a tough
But
one.
it's all right. I'm Boyer, so not Royer. But listen, so everybody that's watching this, just so you guys know, this is going to be actually a long segment. And the reason we're doing it is because we're going to cover a lot of stuff. So if you can't watch it right now, that's perfectly fine. You know, it's going to be up here for a while. And Eric's going to rock out some questions as a realtor. He is a realtor up in Jacksonville, Florida, a very good friend, Navy pilot. And his wife's actually a SWO officer, which means Surface to Warfare Officer. And, me being the Marine guy. So, all right, Eric. All right, Eric, you get to kick it off, brother.
Yeah,
Go ahead.
Hey, I'm going to be referring to my notes here because what we've done just over the past few years is just kind of collected a database of questions, and just want to make sure for their viewers out there, this is going to be more of a 2.0 VA loan type stuff. We're not going to cover the basics. If you want to look at the basics, we have a video that Sam and I did last year on just covering, debunking any VA loan myths. So this year, I want to kind of get in there and ask a little bit, some questions that have a little bit more meat. So with that being said, let's get started. You ready?
Yep, go ahead.
All right, sounds good. Hey, so can I use my VA loan more than once? And if so, are there any rules or caveats to that?
So yes, you can use your VA loan more than once. So just like I'm a veteran, I had a VA loan once before. I no longer have my VA loan because that house actually got sold. So my maximum benefit got restored. Now, what I mean by maximum benefit, VA allows up to a certain amount. It's like $480,000, right? Well, the fact is, my benefit, let's say I only bought a $100,000 house up in Pennsylvania, because that's where I'm from, and I decide to move down to Florida and I want to buy a $200,000 house down here. Well, the fact is, as long as I live in that house as my primary home, I probably could get a second VA loan, which a lot of people don't know, and that might have been a question you were going to ask me. But yes, a VA home loan is not a one-time type of thing. It is something that even if you pay off your house, your VA loan eligibility can be restored. And as long as you're buying another house with your benefit, and it's going to be your primary residence, VA does not do anything with investment properties, then you're good to go.
That's awesome. So I think that we were kind of leading into that question. So let's say I just PCS here to Jacksonville, because that's where we're at. I got a lot of military families here. They bought a home with their VA loan, and then they're going to decide to rent that house out, and then they're going to move back to San Diego. Can they buy another house out there in San Diego while they have a VA loan here in Jacksonville?
So you're asking a question that's loaded because you know how much housing is in San Diego, right? So
yeah. Kind of pose the situation, the question.
So let's say they bought a really small house in Jacksonville and they had a lot of entitlement left and they decided to go to San Diego because they PCS, which PCS means what, Eric? Because a lot of people might not know.
Yeah, permanent change of station. It's when you get ordered to a new duty station.
All right, so all you non-military people, just so you know, that's what it means. But anyway, so when you PCS, then yes, if you have a house here in Jacksonville, you decide to rent it out, you are allowed to buy another house again as long as you have that eligibility left. So now, here's the situation. Let's say you don't have enough eligibility. I have a loan right now. The gentleman actually has a house up in, I believe, Virginia. He moved down here, and he's buying a house. He's buying a $357,000 house. His eligibility allows for him to maximize $347,000. So that extra $10,000 he's basically putting down on the house, which is, it's a big amount of money, but, for the benefits he has, he doesn't actually have a funding fee. So it really worked out for him.
That's great. So let's, since we're talking about VA loans, are there any costs associated with the VA loan, specifically closing costs? Because the question that we get a lot of times is that, hey, I'm using a VA loan, so I don't have to pay for anything. Can you elaborate a bit on that?
Yeah, so basically VA, it depends on the lender you work with. So obviously I'll be biased towards myself because we're a lender, but we charge nothing to do a VA loan. So what that means is that, processing fees, underwriting fees, anything like that, we decided as a company to say we are never going to charge you anything, or origination fee, because VA actually allows a lender to charge up to 1% origination fee. So if they're buying a $300,000 house, you can actually pay up to $3,000 to that lender just to do a VA home loan. Now, for us, let's pretend you're going through us, we charge you zero. That doesn't mean there's still not third-party costs that are associated. So third-party costs are things like your appraisal, title insurance. If there's any kind of transfer taxes or state taxes that you have to pay, then it's a requirement that it gets paid by somebody. Now, the coolest thing about VA, I go back to my first house I ever bought when I was a kid, 20-some years old. Basically, the only thing I paid for was my home inspection. The seller of the house, actually, my realtor negotiated. The seller paid everything else. So that those taxes we just talked about, the title insurance, even the appraisal, my realtor negotiated that the seller will pay all that. So I literally just paid $350 for my home inspection.
That's awesome. Now, is there a cap to how much the sellers can provide up for the closing costs?
So this is kind of a loaded question as well. I love loaded questions. So the VA manual says 4%, okay? But that is for certain things that are external of what really, how would you say it, what all the costs associated are. So I'm being biased again because I'm from Pennsylvania and now I live in Florida. Those two states alone, I can tell you for doing mortgages 21 years, if the seller gives 6% towards closing, that pretty much covers everything. Okay, because we're not really, I mean, it's expensive to buy a house in certain ways, but the fact is it normally shouldn't exceed 6%. Now, the cool thing is, and where this 4% rule comes in that everybody gets kind of wigged out about, is that if there's things like actually a seller can actually pay certain things that the veteran might have obligations to just for them to qualify for a VA home loan. So that's where that 4% comes into play. Or let's say the veteran's trying to buy down their interest rate. That goes towards that 4% calculation. But I can tell you, Eric, in the state of Florida, especially because we're both here, if a veteran's buying a home in Jacksonville, Florida, and the fact is you negotiate that the seller pays 4 to 6%, the veteran's probably going to need $0. Now, another caveat, doesn't mean, Eric, you're submitting an offer for a house. The seller of that house is going to want a good faith deposit. So that veteran might give you $1,000 check or $500 check because that's kind of their way. Now, I don't know Florida law, Pennsylvania law, that's called consideration for a contract. You have to give something of value for that contract to be binding. So this situation, that $1,000, the veteran's like, whoa, I just spent $1,000. Well, the fact of the matter is that if the seller agrees to actually pay all your costs, you could get that $1,000 back at closing. So it's pretty awesome.
That's really good. So now for my final question with closing costs. So we do have that. Let's just say we're in a really hot market. And this house came on the market today. Buyers really want it, and they just want to have a really clean offer, but they don't have much in regards with closing costs. Is there any way to finance closing costs into your loan?
So I always say no, because you can't, the VA is not just going to let you borrow more money to pay for it. That's where a good real estate agent comes in, like yourself, Katie, where you actually negotiate with that seller. Now, if it's a really hot house, is it likely that the seller will pay all the closing costs? It really comes down to negotiations. You never know what that seller's intent is. So if the seller's intent is just to get rid of the house, you might be able to do it. And also just a negotiation facet, you guys do a great job. So
we had heard that you can roll in closing costs into your loan as long as you pay a higher interest rate. Is there any truth to that?
No. So basically, you're not rolling it in. The lenders make money off rates. And what I mean by that, it doesn't mean lenders go out there and jack up the rates just to make more profit, because that's basically what happened back in the mid 2000s. Lenders were just ripping people off, charging them higher rates and making a lot of money. Now, there is a legitimate way, though. Let's pretend the base rate today is 4.5% to buy a house, right? If I give somebody a 5% rate, that extra money that we would make based off the fact that I just gave you a 5%, we can give it back to you, which then in turn will cover part of your closing costs. It's called premium pricing. Now, I can tell you there are some lenders that probably try and do that and make some extra money. We definitely are not about that. We are about trying to get the lowest rate possible, so that you can maximize that money if you needed it, or just basically we're going to get you the lowest rate possible.
Gotcha. Yeah, and then so let's say I went through, did all my mortgage, been living in my house comfortably for the last 3 or 4 years, and it's time for me to PCS.
Yep.
And so, but I locked in that really nice low interest rate of 4.5. And let's say in 4 or 5 years from now, it's back to 6 or 7. What can you talk to us a little bit about mortgage assumption and VA loans, and who can qualify for that, who can do that, and just kind of the ins and outs of that?
So really, I mean, it's kind of one of those things. I can tell you in 21 years, I've never had one person assume a loan, but it is something. So let's say rates are 4.5, or you have a 4.5 rate. You move to San Diego and the rates are 7%. But you start looking, or you move to Jacksonville, rates are 7%, and you come along and you see a house that's 4.5%. Well, the fact of the matter is you can actually assume that mortgage. You don't actually have to be a veteran. So the thing is that somebody else can.
Don't have to be a veteran to assume a VA.
You actually don't have to be a veteran. And the other thing is that it's going to depend on the servicer of that mortgage, how they're going to allow you to assume it or not. So it's one of those things. It's I don't want to say it's case by case, but lenders do things differently all throughout the country. And it's weird to say that, but they do. So whoever, if you're paying ABC or XYZ Bank, that the person that has that house, their rules would have to apply and they would have to accept it.
Okay. So if we can just keep going down. Let's say a veteran does assume somebody else's mortgage, a VA loan mortgage. What happens to the veteran or the active duty service member that has let someone else assume their mortgage? Is there anything up with their entitlement, or you know what I'm saying? Is there anything left over?
So if I decided to buy yours and Katie's house, right? Because you guys are moving to San Diego, I'm moving up to Jacksonville. I can use my entitlement to cover your entitlement so that your entitlement gets freed up and you can go to San Diego with everything, right? Now, if I'm a civilian and I never served, I don't have any VA entitlement, I come and assume your mortgage. Well, then congratulations, Eric and Katie, your entitlement is still, used up and you can't use it. So it's, the benefit of that entitlement is truly stuck to that house unless another veteran assumes it. And I know I keep saying you and Katie, the fact is you both served. So when you buy a house, here's a good thing. So if two veterans buy a house, right, normally only one veteran's entitlement will be used. It's not going to be a joint thing. Now, you can have it some situations where it actually is a joint thing, but normally only one veteran or another veteran would use their entitlement. And it's a smart thing too, because the funding fee the VA charges, if you don't have a service-connected disability, you have a funding fee. That funding fee, if one veteran uses it, it'll be 2.15% if you're active duty. Then the next house you buy, you might want to use the other veteran's entitlement. So it's only 2.15%, because going back to the beginning of our conversation, if you use your VA twice, 2, 3, 4 times, the second time your VA funding fee is going to be higher. It'll actually be 3.3%.
Okay. So you were saying something about the service-related disability and no funding fee. Can you talk to me about that a little bit? Is there a certain percentage that qualifies you for no funding fee?
Yeah. So basically, whenever you have a service-connected disability, what happens is you have no funding fee. So VA ultimately VA is the number one financing anyway for anybody, but really there it just trumps it, because you literally have 0%. You're paying the VA to get 100% financing. Now, if you don't have a service-connected disability, then you do have funding fee. Again, it's 2.15% if you're active duty. If you're a reservist that served, it's 2.4%. And if you've used it twice, 3, 4 times, it's 3.3%. So that can add up. If you're buying a $300,000 house, that's $9,900 that you're tacking onto the mortgage. You actually aren't paying that out of your pocket. That is something that you're actually borrowing, and the VA allows the lender to basically lend you that money so that the VA makes their money. And just so you guys know, that money is used. It's basically put in a fund. So VA, everybody wonders how VA is backed. The government backs VA, right, as far as the default rate. Well, that money goes into a fund that basically will pay for any losses that happen over time. So that's what that money's for. It's not, the VA is not trying to get rich.
Gotcha. How about refinancing with a VA loan? Is that something that you're seeing? Do you recommend it? When would you recommend it? What are the benefits? I just want to kind of cover that, because we're seeing a lot of sellers that have refinanced in the last 2 or 3 years, but now they're trying to sell, and it's just you don't have any equity left.
Yeah, so number one, being a veteran, having a VA loan, you're going to get barraged with billions of pieces of mail. VA is the most profitable loan, or at least one of the most profitable loans for mortgage companies. So that's why you see 900,000 ads on TV and everywhere else that they're VA experts and so forth, because they make a lot of money. And also, to your question, refinancing is very simple with VA. There's mainly two types. There's an interest rate reduction loan, which basically says if the veteran's paying $1,000 now, and let's say the mortgage company can make their payment $900, and as long as their mortgage has been on time for 12 months, VA is basically going to say, go ahead and refinance. Okay. Now, the other side of it is cash out refinance. Cash out just means you're pulling equity or money from your house to do other things. Now, a question of whether somebody should refinance or not. There used to be this unwritten rule. If your rate was 6% and the lender could get you to 4%, it makes sense. Well, that's not really the case. The case is when you're talking to a mortgage lender and you want to refinance, you have to really go over your long-term payment and objective goals and ultimately where you want to be. The two reasons you refinance is, one, you're pulling cash out just because you got to pay off debt, or you want to do improvements, college fund, whatever, or it's because you want to re-amortize your loan to a point where you're going to pay it off earlier. So I have a good case. I just had a veteran. She served in the Navy. They decided to refinance their loan, and they still had 22 years left, right? Well, we refinanced them to a 15-year mortgage. Their payment only went down like $30, but they literally saved 7 years on their mortgage, right? That's a perfect reason to refinance. But I will tell you, please, 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 even if you don't use me as a lender, you got a question, call me or call Eric. It's one of those things. There's so many predatory lenders that they will utilize VA and say, oh, you're going to save, or everybody's so attuned to rate. Oh, my rate went down 0.5%. But they don't realize, to your point, Eric, in 3 years when they sell their house, because there are some costs associated, your loan balance might go up. Well, that eats away at your equity.
Yeah, we're seeing it all the time. So we just want to make sure we kind of touch base on that. Like, hey, is this something that you recommend doing, don't recommend? But I love that point about, hey, if you're trying to go from a 22 to a 15-year mortgage, that makes perfect sense to do that.
Yep.
And give yourself some payments. So as we're talking about refinancing and kind of getting in, talking about different things like that, we want to really kind of bring in the viewer here. And as they're considering doing a VA loan, or even
Eric, we have 0 viewers right now.
well, we're going to have hundreds out there, right?
I know. I love this.
But so really, like when I'm a first-time home buyer, I'm like, I don't even know if I can get pre-qualified. I don't even know what am I looking at. And so, service members active duty right now are pulling their LESs and leave earning statements.
Yep.
And they would say, hey, what am I looking at? Am I looking at gross? Am I looking at net to determine my debt to income ratio and what I can qualify for?
Yeah. So basically, when mortgage bankers look at your income, we're looking at gross. Now, stupidest thing in this world. I just got paid today. I know I'm on a normal schedule. Eric, I know you get paid every time you have a settlement. So it's a little different. But, my pay came in. I made X amount of dollars, but I only walked away with Y. Y is a lot less because of Social Security taxes, federal taxes, and every other thing you got to pay in the world. So in that situation, the most important thing any veteran or anybody can do when they're coming and talking to somebody in my position, they want to make sure they're armed and dangerous. So what I mean by that is not bring a knife or gun, even though you probably want to shoot the guy. The fact is that you want to make sure you know what your budget is. That means you've sat down with your spouse, or you just know yourself if you're single, how much you feel comfortable paying every month. I'm not trying to be a car salesman, but the fact is that you come in and say, I can afford $1,000 a month. Well, then I can calculate out whether or not we can lend you that $1,000 a month payment. Now, you might be able to afford a $1,500 payment in my world, but the fact is I don't want to sell you on a $1,500 a month payment, because then you're going to be overspending. And if you have anybody that tries to max you out like that, just be very wary, because it really, at the end of the day, Eric goes home to his wife, I go home to mine, and you're going to go home to your spouse or possibly yourself, and you're the one that's going to be paying your bill every time you get paid. So you want to make sure you know.
Right. Is there a debt to income ratio or anything that we need to know about regarding a VA loan?
It's kind of out the window right now. It depends on the credit profile. So everything in my world, what's kind of cool about what I do is that you could have two twins and they could both be completely different, because one might stay home every night and read books. The other one might go out drinking every night and partying. And guess what? The one that reads books probably can afford more of a house because they're more cognizant of not blowing money. So VA, normally you want to be under a 50% debt ratio. Now, this is how crazy it is, and I should pull out my board. If you make $5,000 a month, right? Cut that in half. That's $2,500 is a 50% debt ratio. Now, let's just back up. I just said $5,000 a month. At the end of the day, if you make $5,000 a month, you're probably only walking away with about $4,000 or even $3,800 a month. Now, if we say that you can go up to a 50% debt ratio, that's $2,500. That doesn't leave you a lot of room for living. So it's very, very important, again, to come with a budget and know what you can do. Because honestly, I've done loans. I did one that was 62% debt ratio. Now, I'm not saying that because I'm like some superhero or anything. This person had a lot of money in the bank. This person had an 800 credit score. And this person just had a very stable job. It just happened to be that their debt ratio is high for reasons, but it still got approved. So now, if you have challenge credit, your debt ratio is probably going to be more in the 40 to 45 range. So it's very important that we just look at the overall picture. So
Gotcha.
there used to be a rule, 41%, but with the automated technology, everything's out the window.
Gotcha. And you did mention a little bit about credit scores or credit. Is there a minimum credit score required for a VA loan?
So VA does not actually have a minimum credit score requirement. And here's your disclaimer. However, lenders do. So it depends again. I'm very blessed because my company, I report to the 2 chief credit officers. We have a veteran that has a challenging situation. Their credit score is a 570. If the overall rest of the profile looks okay, there's ways that we can fund their mortgage. However, that doesn't mean that every 570 who walks in my door I can do. The fact is that 580 is kind of the real minimum a lot of people look at anymore. But, let's pretend, Eric, you and Katie, and I'm not like wishing bad on you, but let's say that Katie was the main wage earner and you were the at-home dad, right? And then bang, Katie got hit with cancer and passed away. Now, for 6 months, you're sitting there, you're reeling, you're trying to pay the bills and stuff. You have to find a job now. You have to find daycare. And now you get back on your feet. You go, you get a great job, everything else. But I pull your credit about 12 months later because you and your kids, you want to get into a house, right? And I see that for that 6-month period, even maybe 12-month period, you just had really challenged credit situation. Now, am I going to sit there and hold your feet to the fire because your wife had cancer and passed away? And basically this one period of your life, something went really bad and you can show proof of it, right? That's the most important thing. You can show proof that this happened. That's called an extenuating circumstance. And that's something VA is very lenient on when situations like that happen. Think about a lot of guys that came back with PTSD or girls, right? I just did I actually forgot what he was in. I don't think it was a Marine. I think it was Army, but he literally had PTSD really bad. He actually went to some kind of therapy that underwater helped with his PTSD, right? He became a rescue swimmer. No joke. This guy's record as far as credit and stuff was shot. We got a compassionate letter about everything he went through. We went through his combat history. And when we got his DD-214, this guy was stacked to the hilt, right? So everything proved, was truly shown, proven, everything else. My underwriter actually accepted it. And we did his mortgage. So, and that one was actually, it wasn't so much a credit challenge. It was more the employment history because his employment was all over the place because he had odds and ends jobs and everything else. But when we saw that he actually went to this school, it actually helped him with his PTSD and it was set up for that. We were able to do it. So that was definitely a home run.
So at the end of the day, we're not just numbers on an Excel spreadsheet. We're people
No
that's
way.
and we're all trying to help each other out. That's awesome.
And I'm gonna pick on the big boys in the world of lending. VA, Eric, you and I, we had a great experience, right? We've worked together for a long time. Everybody, I'm gonna say something very personal here. I didn't do Eric's mortgage because Eric found there was a lender that actually at one point in time was super, super cheap with their rate. And you know what? I did your first one. But that happens sometimes. Look, the 49ers are my favorite team. We're not always going to be the best. Obviously, right now we're not. But the fact is that sometimes there are banks that do come out. They're very aggressive with things, right? But if you think about anything in life, when you go out and buy something, or if you're selling something, you can't always sell at the lowest price possible forever because sooner or later you're not going to make money and you're going to go out of business. So there are certain times you will get that diamond in the rough. I can tell you, if you are superb credit, if you're superb everything, you know, there are a lot of lenders that will sit there and really undercut and do well for you. But if you are just like the rest of us that have just, you know, your car loan, your house, a couple credit cards, whatever it may be, and your credit's good, you maybe missed a payment, you know, you're probably going to fit into the world of everybody that is basically a normal consumer that buys. And pretty much if you get a quote from company A, B, or C, they're probably going to be roughly the same. So just know that there's no real diamond in the rough other than certain situations for short period of times when there is.
Now, now you're talking about A, B, and C. Is there a period of shopping around that buyers can do while they're looking for whatever a lender can offer them? Like,
so I'm gonna rephrase your question. So I just had a lender pull my credit, and I'm really worried my score is going to go down if you pull your credit. Now, exactly. There's a thing called credit abuse. If I decide to go out and get a mortgage, a car loan, a credit card, a student loan, and a personal loan all within a month, and all those different types of creditor pull my credit, the credit bureaus are going to say, okay, this guy's going through something, and we're going to lower his score because we're concerned he's going to overspend, right? Now, Eric and Katie, you guys have always been diligent in life, right? You pay your bills in time, everything else. I pulled your credit, right? I see that you guys are great, okay? If you go down the street 7 days later and have somebody pull your credit that's in the mortgage world, the credit bureaus are going to see this person pays their bills on time. He's obviously shopping for a mortgage, and we're not going to sit there and jack his credit up because he's shopping for a mortgage. We want him to get the best he can. Now I'm going to hit on Credit Karma and all that other stuff. All these companies are, what are they called? They're incubators to bring in leads for lenders, okay? So when you see your Credit Karma and all these other credit sources say your credit score is a 750, your credit score is probably like a 700. If it says your credit score is a 700, it's probably like a 660. I can tell you they overpromise and underdeliver. And I've had if I can count on one hand, a very few clients that literally they came in and said, I pulled my Credit Karma and it was 770 and their score was a 765, right? And it's really sad that that's happening. If somebody wants their credit pulled, they want to know exactly what they can borrow, they need to go to a lending source that pulls from the bureaus. That's the only way you're going to know what you truly can get. So that's a little caveat that was on the side. I just want to throw in.
Credit Karma to a lender is a Zestimate to a realtor?
Yeah, that's a good way to put it, man. I'm putting a big thing up there. Credit Karma is yes. So we're going to get sued. You're going to get sued by Zillow. I'm going to get sued by Credit Karma. But the fact of the matter is, it is.
All the time. It's like Zestimate. My house is this on Zestimate. Well, I don't know the last time Zillow went into your house, you know.
Yeah, it actually is. Yeah, they're not. It's really sad because a lot of people, they talk to me and they're like, but I just pulled it up. It's on my phone right now. And I'm like, you know, sir or ma'am, I'm pulling directly from the credit bureaus. This is what your score is, and this is what we have to go by. So I really, honestly, probably in less than one hand, I can count how many people have been really close. You know, if your credit is just stellar perfect, they're probably going to be close to the range of what you are. But if you're just a normal consumer, normal American that has some debt, it's going to be so off. It's crazy.
Yeah.
So yes, it's the estimate of mortgage banking.
A quick question. So we were talking about debt to income ratio earlier, things that can affect you, and like you were talking about, like, hey, gross, net. Last time we pulled out a mortgage, something came up that was pretty interesting. I don't know if this is recent or it was, I don't know what's happening, but we got a question about childcare expenses. And like, hey, is that unique to the VA loan, or is that all loans, or can you talk to us about that?
It's really unique. VA does count childcare expenses. So you can sit there and be the most perfect credit person in the world, not have a lot of debt or anything else. But let's say your income isn't that high and you're really trying to stretch because you want to get into a home, and then bang, that letter comes out, or your lender forgot to ask you, which happens a lot because lenders that all are VA experts, they forget this question, is do you have any childcare expenses? Now, let's give some examples, Eric. Your childcare expenses, do you think you can write those off on your taxes?
Yes.
Yes, you can. So people sit there and say, no, I don't have anybody. I pay my sister Susie, right?
And then we get their tax return and, oh, there's $10,000 that went to ABC Childcare. Well, guess what? That's a childcare expense. You have to have, like, if your mom is watching the baby, but you show nothing that is like childcare expense related, but you pay mom $100 on the side, you know, it's up to you to be honest and tell us that. But the fact of the matter is, if we can see it coming out, or we see it in bank statements, you know, if you see checks going to ABC Childcare, we are going to have to question it. And you, under oath, in theory, because you do sign a form that basically says if you lie to the federal government, you could go to jail. You know, you got to be honest about that stuff. And yes, that does get included in your debt ratio. And childcare, I had 2 kids. They were in childcare at once. It's a lot of money. So
it's not cheap. No, I mean, but do you want cheap childcare? You know?
Yeah.
No, I want to make sure you're putting your investment in there. So let's see. About to get out of the military. I got 6 months left. I want to buy a home. Am I able to buy a home if I'm about to get out of the military, or are there things I need to do in, like, should I put in protections in place, or what do you recommend?
I mean, normally, personally, this is more a personal question for me. I would want my life set up before I went and bought a house. Now, if you know what your disability is going to be, which a lot of guys don't know if they're going to get disability, if they're going to get retirement, they know what that's going to be. That's a whole different ball game. But if you don't really have an income source, that's one of the 3 C's: credit, collateral, capacity to repay. That capacity to repay is very, very important. Now, let's say you have a job lined up. You have an employment acceptance letter. Everything is good to go. You know you're going to make $80,000 a year. We can use that to get you into a home. There's going to be extra steps. And that's where I think our society has become very tainted. A lot of things used to be super easy. I mean, trust me, I had people call me up. They had 800 credit scores. I didn't need any documentation. They got a mortgage. You know, that was years ago. But the fact is that we have to document everything, because guess what? In today's day and age, if you go to court and you get foreclosed upon and you say to a judge, well, I told the lender that I was losing my job or I was walking away. Well, guess what? We have to prove to them that, you know, we gave you a mortgage for a certain reason. Well, back in the day, the judge just sided with the banks. So not that everybody wants to get in a legal turmoil, but the fact is that we need to show, like, banks are on, what's the word, or lenders are on trial every day, because we have to show proof why we lent money to somebody, which is good. Actually, I'm glad, because my business has grown because all the schmucks got out of the business.
That's fine. Okay, so what I'm hearing is just have a game plan moving forward. If you have a job lined up after you get out of the military, no problem. If that aligns with your goals, good for it. But if you don't have a job aligned as you're transitioning out of the military, kind of look at different income sources. If not, then you're probably not going to qualify because you don't have any income.
Correct.
Yeah.
Correct.
And kind of getting close here to the end of my list of common questions we've been receiving. Buyers are out there still looking for that good deal. And they're still looking for those foreclosures and the short sales. And the question we get all the time is, can I use my VA loan to buy a foreclosure or a short sale?
Yes. So here's your short answer is yes. Here's the main thing, okay? Habitability of the house. So foreclosure normally means somebody was really upset, they lost their house, and they probably wrecked the place, right? Short sale is normally somebody coming to terms with something's happened, and they work it out with the bank. So the house is probably in better repair, right? So Katie and Eric, I'm going to use you guys as an example. This time you're going to be on a downturn here, Eric, but you guys go buy a house for $200,000, right? And the house is in great shape, and you walk out of settlement and bang, a Mack truck hits you both, okay? So you're dead. Now, that $200,000 house I just lent you money on, I have to turn around, and I know it sounds crude, but we foreclose on it, we get the house back, and we have to sell it, okay? Now, banks or lenders are not in the business of fixing up homes to sell them, okay? So let's move back a couple steps. When Katie and Eric were looking to buy that house, if that house is not habitable, whereas if Katie and Eric could turn around and like sell the house the next day if something bad happened, well, that's something that the VA is going to look very harshly on. So when you go into a foreclosed house, if the house isn't habitable, if the house is like ripped apart, there's holes in the walls and everything else, that could be an issue, and VA probably wouldn't finance. Well, they don't finance. VA wouldn't insure that mortgage, right? Now, if you walk into a house, but it's like 70s carpet shag, it's green walls, and it has the popcorn ceilings, which I actually love, and it just was like horrible looking, the appraiser, as long as the appraiser notes that it's in average condition, then VA will probably insure that mortgage.
Is there, and the appraisers, are they inspectors? What are they doing? Are they looking at, we hear all the time, minimum property requirements.
Yep.
Can you talk to us about that?
So VA basically just tags minimum property requirements, but VA, FHA, conventional appraisers, they're all looking for things like safety. And what I mean by that is they're not going to go in depthly and try and like test every single outlet in the house, right? That's what a home inspection is for. But an appraiser might stick a outlet tester in, and if it comes up that it's not in good shape, or if they see like a junction box that's all messed up, or they see like a hole in glass, that's something where they'll call for saying it has to either be inspected or repaired. That's just kind of common sense. If you're buying a house, you want the house that's not going to fall down. Now, realtors that are out there, you have to realize the VA requirements back in the day were a lot harsher. VA, FHA, conventional, if something's messed up with the house, they're probably going to call it, or they're going to note it on the appraisal, and most underwriters are going to want it fixed. And it's not just my company, it's every company. Because think about this. You and Katie have a little baby. She sits there and she puts her hand in that glass that was broken. We just lent you money on it, right? Everybody's sue happy. You come back and say, well, lender, you knew that there was broken glass, and I can't believe you just gave us money, and we bought this house and it was in disrepair. So I'm going to sue you, the realtor. I'm going to sue you, the lender, and everybody else. So it's just one of those things that people are on, high alert for that kind of stuff.
Yeah. We see a lot of foreclosures, and sometimes they don't have like stoves or they don't have flooring. It's just, you can see the concrete, slab.
Yeah.
Is that authorized? Can you buy a house like that?
So stove normally you need, which you can get one at a repair shop and get it put in. Flooring, yes, you need. I have seen situations where I've seen appraisers, and I'm going back in years now, but I've seen appraisers where, let's say the carpet's there, but it's not installed yet. They kind of will go for it because they know it's going to be installed. It just might be a last minute thing. I mean, our company's pretty good about that stuff, whereas we can make judgment calls. We're not sticklers. We want people to buy homes. We don't want them to be, stressed out about stuff. So it's more judgment call.
Yeah. So kind of what I try to explain to people too is just like, hey, the VA is trying to make sure you as a veteran are protected. They want to make sure you got a roof over your head, that you've got things that you're going to be safe inside, and they're putting in another layer of protection. And that's kind of how I try to bring in minimum property requirements when we have that discussion. So
it's a good way to put it. But the big thing, Eric, is sellers are like scared to death because realtors don't know how to talk about it. VA literally is the easiest financing, the smoothest financing, and honestly, one of the most heartfelt financings you can give to somebody. And when you have a veteran walk into a house and the seller says, I don't want to sell VA because I heard it's hard, well, just have them give me a call. I'll talk to a seller any day, even if it's not mine, because I want that veteran to get in their house. It's so important. And it's just sad when other realtors even will fight it. Oh, we don't want VA financing. Why? Like, why wouldn't you want a person to be happy in their home? So we've had people write letters. We've had people talk to sellers and just go. And I mean, think how many Christmases, birthdays, you and I, Katie, many of us have missed. It's one of those things, we're trying to buy a home and VA allows us. Since 1944, VA has been around. And they set it up so that veterans coming back from World War II could get into homes. And I from Allentown, Pennsylvania, let's say, there's a place called Midway Manor. It's literally what the neighborhood is called. All these brick Cape Cod houses that were built for veterans coming back. So
that's so cool.
But
cool. All right, here's my last question for you. And it's just kind of, I don't know, the trend's been happening here, but people want to buy land, and people are in more rural part of Jacksonville, different parts here in the county, different counties surrounding Jacksonville. Can I buy a farm or land with a VA loan?
Well, it depends. If it's a working farm, if it's something that, if you're sitting there raising cattle and stuff like that, I would say no. But if it's, I was telling you guys, I had a loan once where the person bought, it was a farm, but everything was not nostalgic. What is it when it looks pretty? Like the little cornfield that was in the front, it was just pretty looking. But they didn't use it for farming. They didn't sell crops. They didn't have anybody come in and utilize it for anything that's not. It just was a nice looking farm that literally was not like a working farm. So it just really, it's one of those case by case basis where we just have to see the property. Now, land loans, VA doesn't finance land. Okay. So you can't just go buy a piece of land with a VA home loan. Normally, a lot of smaller local banks will do that kind of stuff, but you're going to have to put money down. Now, if you go to a builder, that builder has a piece of land, you're going to build on it. There are ways to do that. Some lenders have VA new construction. Some lenders just do turnkey. It just really depends, and it's really going to depend on the overall, picture of what you're going to do with it.
Okay. Yeah, because I think what we've been seeing lately is that people are trying to buy land, but they're also trying to buy a house, and they're trying to talk to a local builder or a builder they contract and saying, hey, can I use my VA loan to hire that builder to build my house on that land that I bought with the VA loan? And it's just kind of.
Yeah, and some builders are super cool with like actually doing it all as one project. You just have to find that one builder, and there are some added things that the builder has to just report to as far as building a home VA. But it's nothing out of the ordinary that literally they couldn't do in 10 minutes. So, yeah, and honestly, if a builder wants to grow, selling to veterans, just like that Midway Manor I talked about, that I don't know because it was so long. Obviously, I wasn't born. My dad wasn't even born yet. But when Midway Manor was born, I'm sure it was some builder or developer that came in and said, hey, we're going to build houses for veterans, and we got this VA backing. So they built all these houses, sold it to a bunch of veterans, and Midway Manor was born.
That's awesome.
So if anybody watching from Allentown, Pennsylvania knows the history of that, let us know. Comment
below.
So
that's all my questions. I think we covered almost an hour's worth of information.
That's cool, man.
A ton to absorb here. I hope you guys enjoyed that. Sam, do you have any last comments you want to talk about Heroes First Home Loans? What you guys are doing over there?
Just having fun. So we're working with a lot of people we just really care about. And, it's kind of funny because everybody thinks there's a catch and there's really not. Last year, we sent over $75,000 in Visa gift cards to Heroes.
Wow.
We actually saved upwards of $225,000 in junk fees. And right now, there's $1.25 million in mortgages that are protected through us or the company we partner with, that literally, if these people lose their job and they're not working, they help pay their mortgage up to $1,500 for 6 months. So it's been the biggest blessing. Jeff May, CEO, thank him for, setting up Heroes First Home Loans. We're a Cherry Creek company. It's our parent. Actually, our CEO's son is moving down to Florida, and he's going to be working with us just to learn how to grow this, because we want to grow it all over the country, because we do. It's just a matter of honoring people, man. And just like, you walk up to somebody and say thank you and mean it. It means the world to them. And like I said earlier, you can't always be the best. There's always going to be somebody that's trying to be better. And that's great. We're consistent with what we do. We're not going to change our mission or our motto. And literally, we're going to be here for a very long time. And I just want to thank all the people out there that have trusted us, with their financing. And, we just hope to serve more people. And I know you guys are killing it up there. So how about you, Navy to Navy Homes? You're working with the Homes for Heroes program. What's up with you?
Yeah, so it's great. So Katie and I, we have a real estate team, First Coast Heroes up here. We're with Navy to Navy Homes. That's our brokerage. And we have a buyer's agent on our team now. And we've got a assistant who's just doing awesome things here. And we're just looking to serve our military community and our other hero pillars through Homes for Heroes. It's medical professionals, police officers, firefighters, teachers, and military, active duty veteran, guard. And so it's just a way of us saying thank you for everything you guys are doing out there, and it's just a tangible way of saying thanks. It's awesome. So on average, we give back about $1,500 on the buying side. On the selling side, we reduce our professional real estate service fees by 25%. So that way, it's just a way of us saying thank you for your service.
And if you think about it, Eric, you combining yours with ours, I mean, it saves a veteran a lot of money, where you don't have to go back and negotiate for the seller to pay more, giving the seller net more money, in turn, hopefully getting more house then, or the offer for the house, especially in a competitive market like Jacksonville is. It's huge. I mean, so even though your program is separate from my program, when you combine the two, it's like a home run for that individual that serves. So
yeah, it's awesome that these programs exist. I wish I would have known about it when I was active duty. I had no clue.
I know. Seriously, I bought like 10 houses. I had no clue. Well, the other thing too is, if you're a veteran out there, and I'm not trying to pick, because look, everybody's human. They have friends, they have family. Ask your lender, ask your realtor, hey, are you going to honor us? And it's not a pompous thing. It's just like going to Home Depot or Lowe's. Veterans didn't know they get 10% off. You got to ask. So the thing is, if they're not, Eric's here, Katie's here, his wife, I'm here, our teams are here. And if people don't want to do it, come back to us.
Yeah. Sam, where can people find out more about you?
www.heroesfirst.com. Heroes First, and Heroes is HEROES, and then FIRST.com.
Okay, awesome. Well, we appreciate your time this morning. If you guys have any comments, just go ahead and post them below. We'll have this on YouTube and on Facebook, and we'll just keep it there. But just go ahead and private message us if you want, or comment, or email us. I'll have links for the emails as well in the comments below. And thank you so much for tuning in. Thank you so much, Sam, for
thank you guys.
here. And you guys have a great rest of your day.
Awesome. Have a good day. See you guys.
Thanks, brother.